That's what I try to talk about in the beginning here. Because what is money, whether it's digital money or cash or anything, it's like a social construct, isn't it? And it took a while, 10 or 11 years or so, for Bitcoin to become the value that it is today, the more than $1 trillion market cap. That's how much Bitcoin is valued at. And when you add the other coins up, many trillion. And as confidence in Bitcoin is built, I think that's allowed its market cap to increase, and usage as well. You know, the value of each transaction each and every day. There's a combination of all those factors.
Okay. So you're on your slide, and then I'm going to get this. Oh, that's right.
Okay.
Oh, do you have the HDMI?
Yeah, so a little bit about me then. So I've got a degree in computer engineering. So that's a technology degree. And then I've worked most of my career using IT in finance. Initially some of the big banks like Morgan Stanley, a big American investor. And Bitcoin cannot be explained in 10 minutes, right? So I don't want to, you're not going to leave as Bitcoin experts, but you will leave knowing a little bit more about how not just Bitcoin, but other cryptocurrencies actually work. It's good to understand a little bit about this history before we focus. Okay. So as I say, what actually is money, right? And everyone kind of thinks they just know what it is. And that is in a way what gives it the value. A collective body of people understanding that a piece of paper or a coin in your pocket actually means a medium of exchange, and it therefore has some value, even though it's not actually linked to anything anymore. It's linked to typically gold in vaults, but that's not the case anymore. So money really is just like a social construct where you've got a collective body of people having a belief in something. Gold isn't perfect. Right? So sort of leading us into, well, what is better? What are the pitfalls of gold? Okay. So although it's been trusted as an asset for 5,000 years or more, it does, as we've discussed already, not lend itself to be particularly divisible. That is a problem. It's not particularly portable. You can't carry it around in your pocket. So it doesn't score well there. And recognizability, actually it's quite easy to make a metal that looks like a gold. You may have heard of fool's gold. That can be created. It will look like gold. It will weigh a similar amount of gold, but it is not actually gold. You can gold plate a bronze bar. It will look like gold on the outside. It actually isn't gold if you cut it in half. Right? So gold has actually all these downsides. Whereas central government, changes of policies and so on, and not everyone can predict, can engineer greater supply. So therefore it's kind of outside your control. Central governments can engineer, and they do, inflation. And we've seen that to a particularly bad extent in Germany after the Second World War, in Argentina, and in Zimbabwe more recently. So therefore, is your trust in central bank controlled fiat money, or is it in digital money where programmatically the issuance rate is already known? You might argue that digital currencies have greater value because you know in advance what the inflation curve looks like. Which slide stay? Trust. Okay. Now this word is so key when it comes to what is a distributed ledger technology and what is blockchain, which is just one instantiation of it. Money is about trust, and blockchain has to get this trust model right. I'm going to kind of show you how that trust model works in a brief way later. Okay, so now we're going to get into the heart of Bitcoin. So there's like 5-10 minutes there on a little bit about money, the importance of trust, the importance of things like divisibility, and those other characteristics like portability that we talked about. This is kind of showing how it works, right? So on the left here, you've got the people that write the code, the core developers. At the top here, you've got the miners who are validating these transactions within the blocks. You've got users in the center who create incentives for the miners. And they do that by paying a small transaction fee. So if I want to send Faye 5 Bitcoin, I will typically pay a small fee for that. Several thousand such transactions being created in a block, those fees get added up. Whichever miner solves this mathematical puzzle to generate a block, they get a block reward that is a certain number of defined Bitcoin plus these transaction fees. So that incentivizes these miners to do this mathematical code breaking. That's where they get their reward from. 10 minutes. Okay. So the economics associated with the Bitcoin currency is already built into the code that cannot be changed. But to do this mining, so it's not a particularly complicated maths challenge, it's basically guessing at a number. But to do that guessing, you do require these incredibly powerful computers. And computers require what? They require energy, don't they? You've got to put energy into a computer, normally in the form of electricity. You've got to put energy in to get results out. Right? So what the miners are doing is investing in the hardware, whether it be a computer or a dedicated mining device. They then have to pay for the electricity to go into that device. The device then does the calculation to validate all these transactions, produce a provable outcome, and that's how they get the reward for validating those transactions. And that reward is in the form of Bitcoin. That's how the trust is generated. Okay. This is a standard supply curve. As the issuance comes down, the value potentially goes up. And you can see after the last halving, which was last year. Okay. Right, so we're going to get a bit technical now, right? First, I'm going to explain to you what is called the Byzantine generals problem. This is a nice little visualization. So this in real time is going to show me a number of Bitcoin transactions going on around the world, right? So bear in mind what I said is you've published this information about all these transactions. Therefore, you can use what's called a Bitcoin Explorer or a Block Explorer to actually see all these transactions going on around the world, right? So this kind of pretty close to real time shows me all the transactions that are happening and where they're happening in the world and when the last block was mined and who the miner was, if they've registered. The relay location is the actual computer of the world that's sent on the next message that I'm seeing here. That's the block number since the very, very first Genesis block. We're now, what, 684,000 blocks. That's how deep the whole blockchain is. Each block's been mined every 10 minutes. So if you did the maths, if you did that number times 10 minutes divided by how many minutes are in each year, you'll be able to see exactly when Satoshi mined the first block, right to the minute. Okay? So all this data is available, but what you don't know is who owns the wallet addresses where this money's been sent around. So unless I've told everybody what my wallet address is, they won't know that it's me that owns the address. If I tell you my Bitcoin wallet address, then you can see how many Bitcoin I own. So there's a certain anonymity associated with this, but it's not pure, totally anonymous. So these sorts of things, you can just Google them. Bitcoin Explorers. You can actually see for yourself what's going on in the world with things like this. So I thought that was quite cool. And there's one other one, if I can find it. It's quite cool. This one will show us the price of Bitcoin today and a number of other currencies. It's gone down a lot today, you can see here. So this is the way capital kind of markets work.
Is this real time?
Yeah, this is real data. Yeah. So what's this? So there's a Bitcoin versus the dollar. This is the value of Bitcoin right now. It's updated every 3 minutes. So let's change that to every 1 minute. There we go. So look, at 4 o'clock when I started talking, the value of Bitcoin was at $34,000. And it's declined since 4 o'clock this afternoon to 31,002. So it's a very volatile currency against the dollar. Okay? What this shows me here is what's called the depth of the market. So this represents graphically the number of people that are willing to sell their Bitcoin. This represents in green the number of people that are willing to buy the Bitcoin. So this gives you a sort of graphical representation of what's called the depth of the market, how much buying pressure there is versus how much selling pressure there is. And of course, in basic economics, the equilibrium point where this selling pressure and buying pressure comes together equals the price. And that's the price there, 31.3. So this is showing me in real time the actual buying and selling pressure right now. And this is showing me the trend of that price, that equilibrium point over the last hour or so. And if I change the scale to say over the last day, okay, here you can see Bitcoin back in February was at roughly the same price it is now, about 31,000. Then it went up to $64,500 per Bitcoin, and then it's come back down again. That's what currencies do.
Is it a pattern that during a day, which particular period of time, it will go up always, or each week on which day?
You do see patterns with things like when Asia wakes up, there will be typically buying or selling pressure from the overnight news that they would have experienced. And then you've got Europe, when Europe wakes up, they'll be buying or selling pressure or waves. And then when the US start to wake up, they're buying and selling pressure. But that's the same in many global equity and foreign exchange markets as well. We certainly see those waves. But it's of course impossible. I think it's impossible to predict. Some people will claim they can predict it. Yeah.
Apparently it's like easier, like a bit cheaper to buy at night time.
So this trades 24/7. It's always open, this market. Whereas if you think about the Tokyo Stock Exchange, that closes at night, doesn't it, in Tokyo?
No,
London Stock Exchange
like
closes.
the ones that people are not the most active. Sort of.
Well, because it's 24/7, I guess there's somebody awake in the world at any point in time, isn't you, from New
It's not like
Zealand
in the
right the way
early-
through to Hawaii.
Like maybe in the early mornings of some countries and at like the middle of the night to others.
Yeah, what you can see, this is actually a volume graph here. Right? So if we can look at it right now. If we look at it over the course of the last day, you will see the volume go up and down. If you map that onto the map of the world, you'll probably see it's linked to when people are awake and when people are asleep in the more densely populated parts of the world. So there we go. So that's a European day, so from 8 o'clock in the morning, this morning, UK time, through to right now. And then the chart at the bottom is volume. This is where people kind of woke up in Europe. Maybe this is where they're having some lunch. And then this is where they start trading again in the afternoon. And then Sunday evening, it's probably not a particularly popular time for trading. So there's some correlation, I think, to population, time zone, and volume.
What is the creator of Bitcoin to Atlas?
Nobody knows it. Nobody knows who it is. No. Satoshi Nakamoto was the name of the person. I'll show you here. Look at this. Anybody can read this paper. I'm going to show it to you here. This is the Bitcoin white paper. This is what started it all. Satoshi Nakamoto, let's got his name at the top here.
Satoshi.
He wrote this paper. This paper, I think, is only about 9 pages long. Okay? This is what started it all. Okay? If you read this paper, you'll know more about Bitcoin than I do. Okay, it's all in 9 pages. Right? Nobody knows who this guy is, or team of people, or lady. Nobody knows. They don't know which country is from either. That is the Bitcoin white paper. Oops, where did it go?
Which year it was written?
Has it got the year? So I think it's about 10 years ago. Here we go. This is what we were talking about earlier. Hash functions. You remember that screen I had up a moment ago? We typed in attack on Wednesday, and then we put the nonce value in. That's called a hash function. So that's what he's talking about here. Public keys. These are the public keys associated with a private key, and a public key and private key pair is how I sign a transaction. There's a signature. So if you read this paper, it explains exactly how all this works. This is the inventor of Bitcoin who wrote every word here. He wrote that word, he wrote that word, he wrote that word. Nobody knows who he is. And you can tell how many coins he has because of his wallet addresses right at the beginning.
Which word?
And sorry?
I heard you say he wrote that word, and he wrote that word.
Every single word you see on the screen was
Oh.
written by this mysterious character or characters called Satoshi, right? Including those drawings, right? He produced this paper. What did he get out of it? I genuinely don't know, right? But if he claimed all of his coins now, he'd be worth more than Elon Musk or more than Jeff Bezos, who invented Amazon. He would be the richest person in the world. The value of his bitcoins times the volume that he owned. Yeah, it's